In this video, we're going to be breaking down how you can get a buy-to-let mortgage if you're self-employed. So congratulations, your business is now doing well, you've got extra disposable income and you're not too sure what to do with it. A lot of people tend to look down the buy-to-let route as it may offer you passive income and allow you to put some of your hard-earned money from your business into a buy-to-let and into the property market. But one of the questions that we do get asked a lot is, how do I get involved in buying a buy-to-let property if I am self-employed? So in this video, we're going to be breaking down what the lenders look out for, how you can prepare yourself for being self-employed and buying a buy-to-let. Should you invest in your own personal name or set up a limited company and buy through the company? And we'll go through a few other factors that may allow you to get on the road to mortgage success. My name's Anthony from Bolt Mortgages. Don't forget to press like and subscribe if you want to find out more details and see regular content about how to invest in the property market. So what should you consider if you're self-employed and you're looking at buying your first buy-to-let property? So when you're buying a standard residential, the lenders will tend to look at the last 2 years tax calculations, tax year overviews. Some will look at the most recent year's tax calculation or tax year overview or your limited company accounts. However, when you're buying through a buy-to-let, it tends to work slightly different. So although some lenders will want you to earn a basic minimum income to be accepted for a buy-to-let mortgage, it's not based solely on your personal income. It is also based around the valuation for the property and what they believe the property will rent out for. So how much do you need to earn to be able to buy a buy-to-let property? So this massively depends on which lenders you're looking at. There are lenders out there that do not require any personal income and they can still lend to you if you're looking at buying a buy-to-let property. On the flip side of that, if you do have an income over £25,000 per year, the lenders will open their doors up to substantially more products. And because you're earning over the £25,000 a year, you've got access to more lenders. And because of that, you can usually negotiate a deal slightly better due to the fact that you've got more lenders that you can speak to. And what the lenders would look at being self-employed is that they would look at your profits are over that £25,000 per year. When you're applying for a mortgage in your own personal name, the lenders will tend to look at your last 2 years worth of tax calculations, tax year overviews, or your limited company accounts. And what they would do after that is figure out what they would use for your annual income. And on average, they times up by 4.5, and then they would work out how much it is that they can lend you based on commitments, financial debts, etc. However, when you're looking at buying a buy-to-let, it's not just worked out on your own personal income. So the way things change in regards to how the lenders calculate your income when you're buying a buy-to-let and you're self-employed is rather than just assessing your personal income, they would also want to look at the rental income for the property to make sure it more than covers the mortgage payments based on certain stress tests that the lenders do. That being said, there are a lot of lenders out there that will allow you to have a buy-to-let property even if you do not have a minimum income. But if you earn on average over £25,000 per year, that does fit the majority of lenders' minimum income requirements when you're looking at buying a buy-to-let and being self-employed. So should you buy a property in your own personal name or should you buy it through a limited company? So both of these routes have their pros and cons, and depending on your personal situation, each one of these could be better for you depending on how it is you work and your personal income status. As mortgage advisors, we can't give you advice on tax. However, based on the fact that you are self-employed already, if you want your own personal recommendation as to which would be best for you, have a conversation with your accountant and they can give you advice whether it's worth buying a property in your own personal name, whether it's worth setting up a limited company or special purpose vehicle and buying down that route. One of the downsides about buying under a limited company is that it's a bit more of a specialty area. And because of that, there's less lenders in that space. And because there's less lenders, there's less competition and the interest rates tend to be slightly higher in comparison to you buying in your own personal name. On the other hand, the government has brought in a change called Section 24, which has changed taxation in regards to rental properties. For example, if you had a rental income of £1,000 per month and your mortgage payment was £600, previously, you'd only pay tax on that £400 profit. This change now means that you will be paying tax on the full £1,000 if you are buying it in your own personal name. But again, we're not tax advisors. This is correct as of today. So have a conversation with your accountant and they can give you a bit of advice as to which would be the best route for you to go down. But that being said, buying under a limited company, they still allow you to offset your mortgage payments. So that same instance, if you've got £1,000 rental income and your mortgage payments are £600 a month, you'd then only pay tax on that £400 difference. So what is the purpose of a special purpose vehicle? So a special purpose vehicle is just a fancy name of you setting up a limited company to be able to buy properties and hold them under that particular company. So again, this is something you need to speak to your accountant about, but ultimately a special purpose vehicle is just a limited company that holds your properties for yourself. So there are lenders out there that will allow you to buy a buy-to-let property with a 15% deposit. One of the big problems that we'll have with that at the moment is due to the fact that a 15% deposit comes with substantially higher interest rates, the affordabilities stack up on very little cases. So when you're looking at buying a buy-to-let, really and truly, if you have a 25% deposit, that opens the market up to the majority of lenders. And because of that, the interest rates on a 25% deposit mortgage are usually cheaper than if you've only got your 20% or 50% to be able to put down. This deposit can come from many sources. Same as if you're buying your own personal property to live in. It can come from a gift, you can save it yourself over time, it can be from the sale of the asset. But what some mortgage companies will allow you to do, they will allow you to transfer money from your limited company. So for example, if you've got a business that's working amazingly well at the moment, you're earning great profits, what they will allow you to do is transfer money from that limited company to your special purpose vehicle, which is where your properties are being bought and held through. And from that, you can then buy further properties without personally withdrawing the money from the business itself. But again, that's more of an accountant and a tax conversation that you need to have. So make sure you speak to your accountant who can have a look at giving you advice around that. My name's Anthony from Bulk Mortgages. We've been talking about how you can buy your first property as a self-employed person. If you want to find out more details about the buy-to-let process, don't forget to press like and subscribe.